Welcome back. In our top business story, the Central Bank of the UAE today announced the introduction of an international bank account number as a standard for identifying all bank accounts in the UAE starting November 19th. From then on, all bank account holders in the UAE will be provided with a unique 23-digit bank account number, a separate one for each account, which will replace the existing account number for all transaction purposes. All banks across the UAE are responsible for the distribution of the new IBANs to their account holders. The introduction of the IBAN system is an initiative to further align the UAE banking system with the standards applied in other global banking systems, the central bank stated, to increase the efficiency of electronic payments in the UAE, while further strengthening the country's status as a global financial center. The Abu Dhabi Water and Electricity Authority is set to announce plans to develop a 1,500 megawatt power plant, which will also produce 100 million gallons of water. According to a local paper, the authority's director, His Excellency Abdullah Saif Al Nuaimi, told Bloomberg about the upcoming announcement, adding that electricity demand in the capital is growing at a rate of 12% per year and water demand at 5%. He stated that Abu Dhabi Water and Electricity Authority's current generating capacity is 14,000 megawatts and that plants currently under construction in the UAE will add more than 2,500 megawatts of power and 100 million gallons of water. Alder Properties has awarded Egyptian construction company Six Construct a 2 billion dirham contract for the development of a 235,000 square meter shopping mall on Abu Dhabi's Yas Island. Six Construct is a subsidiary of Egypt's largest publicly traded builder Orascom Construction. The 5-year contract will see the development of restaurants, retail units and a cinema, which experts say will add to the many landmarks of the capital and in turn further promote the emirate. The project is set to be delivered by the end of 2013. The Q3 earnings season is kicking off here in the UAE. One of the first to report its results is Commercial Bank of Dubai, which made a net profit of 777 million dirhams. That's a marginal 1% rise over the same period last year. With that, let's now look at the stock indices across the GCC. And in our world business news, European Central Bank President Jean-Claude Trichet said on Sunday that the European Union's treaty should be changed to prevent one Eurozone member state from destabilizing the rest of the single currency bloc and urged for stronger Eurozone governance. This comes as France and Germany said over the weekend that they are making good progress on a plan to resolve the Eurozone's debt crisis and recapitalize the region's banks. Meanwhile, IMF chief Christine Lagarde said in a radio interview that the IMF would release funds to Greece if the country's economic situation is clarified. Lagarde also contradicted speculation that the IMF may need a capital injection to give it more firepower to fight the economic crisis. Lagarde said that the IMF currently has appropriate resources to meet its funding needs. Although there were no concrete developments at this weekend's G20 meeting in Paris, stock markets in Asia and Europe opened in the green this morning on the back of renewed positive sentiment that a solution to the European debt crisis will be announced soon. We earlier spoke with Gaurav Kashyap, head of DGCX trading at Al Pari Middle East DMCC, how the currency markets reacted to this new wave of optimism and what we can expect in trading this week.
Markets have opened on a positive note and we've seen high-yielding assets increase across the board. We've seen the euro build on its higher closing above 138 from last week. We're seeing gold also moving higher to about 1690 levels. And what we're seeing over here is basically a continuation from last week's pricing action, which saw these higher-yielding assets moving higher based on the fact of renewed optimism regarding a solution to the Eurozone debt crisis. Now, we did have the G20 leaders meeting in Paris, France over the weekend to discuss opportunities to increase the EFSF bailout fund, as well as opportunities to recapitalize European banks. Now, what investors are doing is are building on this optimism, and therefore we're seeing higher yielding assets increasing against the dollar. So assets such as the US dollar and the Japanese yen are continuing to weaken in trading this week. And we're expecting to see more of the same. We're expecting to see volatility based on any new developments regarding these cases. With regards to the economic calendar, we're in the middle of the Q3 earnings season from the US. We have Apple reporting on Tuesday. We have Goldman Sachs also reporting on Tuesday. Today sees the releases of Citibank's numbers. So although we saw JP Morgan beat expectations, they were lower than analyst expectations. So we're going to be following that story also very closely. We're expecting the euro to probably test 140 in trading this week. A break of 140 to 141 will definitely expose 143. Gold looks good to continue its gains on the back of a weaker dollar.
For the world's largest rice producer, China, it is of great importance to improve its rice output and guarantee food security. Therefore, farmers turn to the so-called super rice, which has set a new world record for its yield. Researchers say the super rice produces a record 13.9 metric tons per hectare, compared to the national average of only 6.3 tons per hectare for all of China's rice paddies. Today, the super rice can be found in half of China's rice fields, and its output makes up over 60% of the country's total rice production. But more grains are still needed for food products and animal feed. Therefore, some farmers also turn to genetically modified rice, although it has not been fully approved for commercial farming in China yet. Before we go, here's a quick overview of the oil, precious metals and currency markets, and after that we have today's sports news for you.